Why are major banks in the United States failing, and now it's spreading across the world to Credit Suisse? Why is oil prices no longer gushing? Why are interest rates likely to be moderated and maybe even go lower sooner than expected? And are we in a recession now, or are we on the cusp of a recession? And what is propelling this recession forward? But first, hang on. This is not financial nor professional advice. This video is for entertainment only. Hello, everyone. I'm Stephen Fox. These bank failures are starting to get out of hand. The second and third largest bank failures in U.S. history occurred within the last week. The second largest bank failure was Silicon Valley Bank, and it was a bank, of course, in Silicon Valley, which did venture capitalists and startups. So it was kind of a unique bank in some sense, not exactly your typical bank, but it funded innovation and was probably one of the primary, if not the primary, funder of innovations. So it's a big deal, and it was the second largest in U.S. history. The third largest was Signature Bank, and it had problems with crypto. There was another bank that also went broke, Silvergate, and they were a crypto lender. And so involvement with crypto with these banks has added a new sense of variability and uncertainty, which is not what you want to see with a bank. And there are other banks who are having problems, such as First Republic, whose credit rating was reduced to junk status. You don't want your bank's rating to be reduced to junk status. It is ironic that both Signature and Silvergate closed their doors about the time that Bitcoin actually took off and hit about 26,000 around that time, although it settled back down to 24,000 at the time of this filming. And these bank failures in the United States, although significant, they're being overshadowed somewhat now by Credit Suisse of Switzerland. This is a gigantic global bank, and if this goes down, it's going to affect things, although they say there's no risk of contagion simply because the United States banks have tried to cut their ties to Credit Suisse. But it's a huge bank. It's 5 times the size of Signature Bank and over twice as big as Silicon Valley Bank. So this would be a major downturn, and it's already had a major effect. It's caused the European stock markets to go down 2 or 3%, and their major shareholder said that he would not provide more support because he doesn't want to be regulated, overly regulated. If he provided more investment support, there's a clause that kicks in where he would be viewed by regulatory agencies more closely. We mostly got good news on the CPI, the Consumer Price Index, on Tuesday, which came in at expectations, just in line with expectations. The year-on-year CPI number was 6.0. It was 6.4 the month before. and the month-on-month increase was zero point 0.4, and that was exactly what was expected. There was some negativity in that the core CPI, which excludes energy and food, just the two things you need to live, that came in a tenth of a point higher than they expected. It was supposed to come in 0.4% higher, and it came in 0.5% higher. So it basically was in line with expectations, and the market was so caught up in this bank failure scene and worries about bank failures that it more or less didn't make that much of it. And the PPI on Wednesday came out very positive, I thought. The year-on-year producer price index, the PPI, the year-on-year PPI, came in at 4.6%, and it came in the previous month at 5.7%. So it fell from 5.7% to 4.6%. This is hugely positive. The month-on-month PPI came in at a negative tenth of a point. We actually see a decrease. We don't see that very often. The previous month, it had gone up 0.3%. The core PPI, producer price index, was hugely positive. They thought it would come in at 5.2%, and it came in at 4.4%. It previously was 5%, so it dropped from 5% to 4.4%. That's hugely positive. But on Wednesday, the market was caught up in the Credit Suisse and the bank failures, and they more or less just ignored it. The PPI tends to be a predictor of the next month's CPI, simply because producers pass their cost along to the consumers. So if the producers have less expenses, they can afford to pass the savings along, which then shows up in the CPI. Part of what's leading to the bank struggles is a difficulty with liquidity because the yield curve has inverted. You get more interest for a short-term loan than for a long-term loan, okay? Usually they look at the 2-year and the 10-year. The 2-year bonds were paying close to 5% at one point. It's come down somewhat from that. Whereas the long-term 10-year bond was paying like 3.5% or something like that, around there. And so the banks would find themselves paying out short-term CDs, for an example, at a higher rate than what they were receiving on bonds that they had locked in at a lower interest rate than the short-term rates were paying them. Okay, and also when interest rates are raised, the bonds that the banks hold lose their value because as interest rates go up, bonds lose their value. It's an inverse relationship. So it's complicated, but basically it has to do with the yield curve inverting and banks making less money on their long-term loans, and also that the loans that they have made and the bonds that they do own, the longer-term bonds, lose their value. And also when you have the short-term rates go up dramatically, banks pay we're paying like virtually nothing on a lot of deposits, and all of a sudden the short-term rates go up, and people can buy bonds and put money in money markets, and all the deposits start disappearing, which lowers the bank's liquidity, which gets them in trouble. And once the people hear that the bank is in trouble, then even more people withdraw their deposits, and the bank gets in trouble. We might be beginning to be in the beginning of a recession phase. The previous month, retail sales year on year fell over 7%. And this month, year on year, retail sales fell another 5%, over 5%. So retail sales are slowing down. And the New York State manufacturing index took just a huge hit. It was down over 5% the previous month, but this month it fell over 24%. Wow. But maybe the best indicator is oil. The oil price is now headed down to $65 a barrel. And I think that's where they set the price cap for Russian oil. And so I think that's being adopted as a standard of what the price of oil should be. And so that's working. But also I think it's also because there's less demand. And that's a classic sign of a recession coming, when there's less demand for oil, because oil still runs economies. As I'm filming this, the price is about $68, but I think we're going to see $65 on it soon. As far as stocks go, I haven't bought any stocks on my watch list. Simply, I can't convince myself to buy stocks when I know the market's going lower. I just feel it in my gut. Until we have some kind of capitulation event, some kind of major good news, I think the Fed announcing that they're going to back up depositors to banks, I think that has really prevented a lot of pain. But we will see if that holds. I think they're going to have to guarantee all deposits, either insured or not insured, to get the full faith and confidence of depositors. I think that it's just going to be necessary. And when they announce that as a general policy, I think is when the country will breathe a sigh of relief. And maybe then stocks could go forward, because that would be similar to the pandemic when they said we're not going to allow the stock market to go down. Well, this is different. We're not going to allow you to lose your hard-earned money that you put in the bank. Okay, so I think the only short I'm doing is SORTY, SRTY, which is a triple leverage inverse fund on the Russell 2000. For every dollar that index goes down, you get $3. So I'm basically using a triple leverage inverse fund to short the Russell 2000. And the reason for that is the Russell 2000 has many regional banks on it. So even this is related to the banks, and the banks. Until that problem is solved or we get reassurance, I think the market's going to be in very shaky condition. And its symbol is SRTY. But that seems to be the best short, but I'm not all that enthused about that, just because this market is just like mildly not, it's moderately negative, but there's encouragement in the VIX. The VIX goes up to 27. And actually, you could do a trade on the VIX by using UVIX, that's UVIX, which is triple leveraged on the VIX. As for every dollar that the VIX goes up, you make $3. Okay. But I'm not enthused about that. Some people have said, well, you should play the UVIX, you should watch the VIX, and when the VIX goes to 30, then sell it because it'll go back down to 20, and then it'll go back up to 30 because we keep getting slapped in the face over and over with these mild rallies, and then it turns around almost right away. I said this earlier in the year that I thought basically the bottom would be at least 3,200 on the S&P 500, and I think that's probably pretty accurate. And so until I'm not really into shorting that much, I may do it a little bit, but I'm not all that enthused about it. I'm just not enthused about this market. It doesn't have enough upside or downside to really be enthusiastic about it. Until something drastically changes, I think I'm just keeping on with adding to my watch list. And wouldn't you know it, late in the day, Wednesday, Swiss National Bank indicated they would provide a liquidity backstop to Credit Suisse if they had liquidity problems. So basically, the Swiss National Bank is providing assurance that Credit Suisse is going to make it. And I looked at the stock market now in after hours, and it's exploding upwards. Hallelujah. So that's the way I roll. Thank you for listening and watching. Be sure to subscribe if you haven't already done that, and smash that like button for all it's worth. We're going to need some good luck or some good events to occur, or at least have a lack of negative events. If another bank fails, that might, if another 2 or 3 banks fail, I think shorting is all we have left. And I do it with the triple inverse fund shorty, SRTY. That's all I have. Thank you.